All right, let's jack in. Look, the market, it isn't what they tell you it is. It's a simulation. It's a chaotic, high-frequency program, and it's designed by the suits on Wall Street. And what's their goal? To create these little pockets of panic and hype, so they always have someone to sell their shares to. You know, what they call exit liquidity. Most of what you see out there is just noise, a fog of war, designed to keep you off balance. But inside their code, there are glitches, there are anomalies, signals that point to what's really going on. And my job is to find them.
Right, see, take this. This is the kind of static they are blasting into your feed 24/7. This quote hits the wire, and immediately algorithms start firing off trades, retail starts panic selling, and the whole machine just churns. And the suits? Oh, they absolutely love this stuff. They need you reacting, glued to the screen, because a distracted trader is a profitable trader. For them, anyway.
So the question you got to ask yourself is this. Is this the actual signal we should be trading on, or is it just a smokescreen? Well, my theory is that the chaos is the point. It's not a bug, it's a feature. It's a smokescreen that's designed to hide the real moves happening just beneath the surface. While everyone's busy looking left, the real money is quietly moving right.
So, today, we are initiating Glitch Detection Protocol. We are going to filter out all that noise and hunt for the real signal. But a quick word of warning before we jack in. There is a trap in this code, a honeypot, and it's designed specifically for apes like us. I'm going to show you how to spot it, but not until the very end, so you're going to want to stick around for that.
Okay, first up, we have to understand the official narrative. This is like the operating system the establishment wants all of us to run. You've heard it a million times. They've been peddling it for a century. Be patient, diversify your portfolio, trust the experts. And why do they do that? Because it keeps you docile, predictable, and most importantly, it keeps you paying their management fees.
The old guard, you know, the smart money, they'll tell you the market is a weighing machine in the long run. Their big advice, avoid irrationality, buy blue chips, whatever. But our theory, it's different. We see the market not as some kind of scale, but as pure code. It's a narrative machine where a powerful story or a viral meme can create way more momentum than a decade of solid earnings reports. It's all about decoding the narrative protocol.
All right, protocol initiated. It's time to plug into the data stream. Let's go hunt for those anomalies that the suits are desperately trying to patch before we find them.
So, the first anomaly is firing right in the heart of the old system, banking. While the legacy banks are stuck running on, like, COBOL and brick-and-mortar buildings, a whole new protocol is being written in real time by fintech disruptors. And the data spikes? They are literally impossible to ignore.
Just look at this number, 38%. That's the year-over-year revenue growth SoFi just posted. While the old guard is busy dealing with credit crunches and stagnation, this is the kind of exponential growth signal that cuts right through all that mainstream noise. This isn't a prediction, it's a hard data point, and it's a massive one.
And here's the source code behind their growth. See, SoFi isn't just a bank, it's a flywheel. They acquire users really cheaply with free services like SoFi Money, then they monetize them through high-margin lending. And it's all running on their own proprietary tech platform. Each part of the business just feeds the others, creating this powerful, scalable ecosystem that legacy banks simply can't replicate. Now let's zoom out a bit. The next glitch, it's not happening on the ground at all. It's happening up in low Earth orbit. The new space race is all about building the infrastructure for the next century. And the data suggests that most of the market is completely sleeping on the sheer scale of this opportunity.
So, take AST SpaceMobile. Their mission is to build the first ever space-based cellular broadband network that connects directly to regular smartphones. I mean, no special hardware, no clunky satellite phone, just your existing device connecting to cell towers in space. Just think about what that actually means. This isn't just some new feature, it's a potential rewrite of the entire global telecom stack. It's a total paradigm shift.
Okay, now for our final glitch. And this one connects directly back to the intro. Remember all that political noise we started with, the tariff debates, the trade anxiety? Well, it turns out that wasn't just static. For those of us who are reading the code, it's the catalyst. It's the very thing that's forcing a massive, multi-trillion-dollar pivot in global supply chains.
So here's the crucial point. You've got a massive demand spike coming from AI, from EVs, from robotics. And at the exact same time, you have this huge policy push for domestic production. A company like USA Rare Earth, which controls the entire supply chain from the mine to the magnet, well, it becomes a strategic asset overnight. Suddenly, that political noise isn't noise anymore, is it? It's the entire investment thesis.
So if these signals are so clear, what's the catch, right? Why isn't every fund just piling in? Well, to hunt for glitches like these, you have to pay a price that scares the hell out of the smart money, and that price is volatility.
The establishment, they see volatility as a bug, a risk that needs to be stamped out. But for us, it's a feature. As the source material says, volatility is the price that we pay for outperformance. They want rocket fuel returns, but with the stability of a savings account. And that's just a fundamental programming error. The code simply doesn't compile. Think of it like this. You can hold your wealth in the US dollar. It has super low volatility. You know exactly where it's going. Down. It's basically a melting ice cube. Or you can put it into a high-growth, high-volatility asset. Sure, it might be up 20% one day and down 15% the next. The suits, they choose the managed decline of the ice cube. We're betting on the chaotic, unpredictable, but ultimately explosive power of the rocket fuel.
Okay, this is where we compile the code. We've seen the static, we've identified the system anomalies, and we've accepted the price of admission. Now it's time to connect the dots and reveal the true signal that's been hiding behind all that noise. And yeah, I'm finally going to show you that hidden danger.
Here it is, the protocol decoded. Step 1, the establishment blasts the system with noise. All that tariff talk, the political drama. Step 2, this noise acts as a catalyst. It forces real-world changes, like the push for domestic supply chains. Step 3, this catalyst creates a glitch, a market anomaly, where a company like USA Rare Earth is suddenly sitting on a strategic gold mine. So you see, the noise was never a distraction. It was the trigger.
And that brings us to the hidden danger, the trap I warned you about at the beginning. The trap isn't losing money on a volatile stock. The real trap is letting their noise, the fear, the endless stream of apocalyptic headlines paralyze you into doing nothing at all. The biggest risk is not taking one, it's staying in cash while the ice cube melts. That's the honeypot.
So that's the download. The establishment is already out there trying to patch these system flaws, but new ones are always appearing in the code. So where do you think the next one will show up? What anomalies are you seeing in the data streams? Post your theories in the comments below. Let's decode this thing together.
We are watching this chart like a hawk. While you wait for the next candle, go grab your free gear. Sign up for Public to get $20 in free assets. Check Webull for that BTC promo, or grab your NVIDIA stock on Moomoo. All the links are in the description. Smash the like, subscribe to the tribe. Apes together strong.
And finally, the legal code. This has all been educational banter. It's speculation, not financial advice. All investments involve risk. At the end of the day, this whole thing is a casino, and the house always has an edge. So do your own due diligence, stay frosty out there.